Hey guys, Frank Curzia back with another video. If you noticed, the last one didn't post too well because we're learning this new technology and new cameras and trying to get better sound for you. So you probably heard great audio, but unfortunately you didn't see me, which may have been a good thing. That's why I do radio. But I want to talk to you about an interesting trend that I'm seeing in the markets. You're seeing a huge rotation out of technology stocks. These momentum names have been carried, keep going higher and higher. Incredible trends, and it's not based on fundamentals, it's just based on momentum. So don't ever try to justify and say NVIDIA is trading at 80 times earnings or Facebook's trading at 90 times earnings. It doesn't matter because the momentum's behind them, and trying to get in front of that is like trying to get in front of a freight train. It's just going to run you over. For the first time in probably 2-3 years, since these are the companies that have been leading the market, right? The Facebooks, NVIDIAs, the Amazon.coms, you're seeing a huge rotation come out of these names over the past few days. And it's very interesting that, especially right now. So you're seeing the timing where's this money coming from out of these names, and it's actually going into a lot of value plays. And value has been out of favor for a very long time. I mean, stocks that I've recommended that I thought are incredible value, where insiders are buying, the stocks are down 30-40%, they're growing earnings, they just maybe had a bad quarter, would fall another 10-15% from those levels, which is very surprising. Maybe it's because of tax loss selling or whatever it is, but there's just a huge rotation where everybody hates value. Over the past couple of days, we've seen a huge change, right? We've seen L Brands, we've seen Kroger today report really good earnings, up 10%. Look at the department store retailers, right? You're looking at JCPenney, you're looking at Macy's, Kohl's. All those have rebounded sharply off their lows. Why? Because the mall's not really dead like everyone's telling you. You have Amazon, Tesla, Apple open up big box stores everywhere. You have Walmart doing pretty good, which is the big box store. You have Best Buy really doing good so far during the holiday season and throughout the year, right? Big box. So they're trying to find that mix, yet you're seeing a huge sell-off in these names where they're down 60-70%. What does this mean? It means you have an opportunity to buy some of these stocks at dirt cheap prices, right? So you're not buying Facebook at 160 and it goes to 180 and you're high-fiving your friends. I'm talking about buying a JCPenney close to $3 a share, where it was $10 earlier this year, and you could easily see that stock go to 5, 6, 7. I know what you're thinking. JCPenney, you're out of your mind, or Macy's, it's crazy, they're losing business. Try going shopping right now at a mall and getting a spot by one of these stores. They're jam-packed. They got their butts kicked over the past 3 years by Amazon, by e-commerce. So what are they doing? They're adapting. They're starting to adapt. They're creating more services. JCPenney is selling more appliances now, which is fantastic, where you're not going to see appliances being sold on Amazon too much. So you lower the prices of some of your appliances to bring people in the shop to shop for everything else. So they're having good holiday sales right now, and they're not discounting as much as people believe. Their inventory levels are much better. Why? Because we finally have a pretty cold winter, which we haven't had in the past couple of years. So inventory levels are pretty good. But you're seeing that rotation into value, which you should pay attention to, because it's not just retailers. Look at the oil stocks. The oil stocks are finally going higher, which is amazing. Here's a sector that has gone down 15% while oil prices have risen 15%. It doesn't make sense. That's what I like to call a disconnect in the market. Now that we have the OPEC meeting, Russia agreed to the oil cuts, we're seeing a lot of more favorable stories and things going on in the oil sector that's pushing a lot of these names higher. So look for value right now. I know it's near Christmas. I know you got a lot of shopping to do, but you know what? This is your money, and you might be keeping it in stocks that have done very well for you, like the Facebooks and NVIDIA, but right now they're getting crushed. Some of these names are down 5, 6, 7, 8% over the past couple of days. There's a good shot you're going to see them come down even further, as there's a lot of money coming in, a huge rotation going into great value names like Diebold that fell from 40 to 20, and it looked like a fantastic buy, and it fell to 16 out of nowhere. In the last 5 days, it's back up to 20. So there's a lot of names out there that you could find. You may not think that, because every place you look on CNBC, it says stocks are at all-time highs. Well, the markets are at all-time highs. Less than 50% of those stocks are at all-time highs. A lot of stocks have been gotten killed over the past few months. So there is value in this market. Not every stock is trading at its all-time high. Look at the retail sector, look at the oil sector. Those are 2 places to look first. And you'll find some really great ideas and buying these stocks as they go from bad to less bad. Sounds funny, but that's where the biggest gains are made. Like a JCPenney going from 250 to 350 like that in a couple of days. Macy's going up 25% from its lows. That's where you make the biggest gains. So start looking for those stocks. That's what I'm doing in my newsletters right now, Cursor Research. And I'm sure you'll be happy if you pick some really, really good names that are beaten up, that do have growth in earnings, and also check for insider buys. There's a lot of names out there that are going to give you really, really good returns. I'll report back to you soon.